Hey guys, it's Andrew Samaniego, Tax Resolution Specialist here in San Diego. I am going to teach you in this video on how to figure out if you qualify for any tax relief with the IRS by doing it yourself. Usually tax resolution professionals have software that will do all this automatically for you, but let's just say that you can't afford to hire a tax resolution specialist, or you're just looking in a way to save more money in this situation. I'm going to teach you how to do it yourself and see if you qualify generically, broadly, if you would qualify for one of these programs. And the programs I'm talking about are like installment agreements, offer in compromise, currently not collectible status. If you have tax debt, you probably have heard all these terms before. We're just seeing if you qualify, and I'm going to show you how. So it all comes down to this formula. It's called the reasonable collection potential, and essentially it's your income plus your assets minus expenses, and if that number is positive, it means that you qualify for certain things. If that number is negative, it means you also qualify for different things. So I'm just going to show you how we're going to do this. So for this example, we'll have a John Smith here. He's married. He has one kid. We're going to say John Smith is in the Navy as well as his wife. They're both lieutenants with 4 years of service. And as of right now, he only owes the IRS. He might owe the state later, but he hasn't got any notices from them. And on his most recent notice, it said he has a tax owed of $100,000 from back in 2022, and you'll be able to see that on your IRS notice. But it's just for simplicity example here. And he also remembers that he has 2 years of back taxes that he needs to file. We'll just say it's 2021 and 2020. So I'll even put that here. So 2021 and 2020. If you look up an 03 in the Navy with 4 years of service living in San Diego, they make around $11,948 on both of them together, around $24,000 a month, which is quite a significant amount of income. And I can, just by looking at that, I can probably tell you what they qualify for. But we're going to go through this example anyways. So the next thing we need to figure out is what are allowable expenses that the IRS allows you to take. So I'm going to pull out our handy dandy Google. And I'm just going to go type in Google IRS allowable expenses. And I'm not going to go to any other website besides the IRS because that's all I really care about. So as you see right here, there's a 2025 allowable living expenses national standards. So we're going to click that. And we know this is 3 people. So they're allowed for food, housekeeping supplies, apparel, services, personal care products, some miscellaneous stuff, up to $1,753. So this is what the IRS is going to use to determine what a person needs to basically live, and we're not including housing or anything else. But just like their food and their basic stuff that they need to survive. The IRS is going to allow you to take up to $1,753, and for a 3-person family. And here's the amounts for 1 person, 2 person, 4 person. We'll just apply it to your situation. So in this situation, it's $1,753. So I'm going to put $1,753 for groceries. All right. So we're going to say this client also owns a house. They bought it for $750K, and as of today, it's worth $900K. The mortgage costs $3,800. And again, this would be all your numbers for your specific situation. If you rent, you would just put the rent amount would be, $2,000. I think it's an average studio in San Diego. So you would put whatever rent or mortgage that you have. So in this case, this family's mortgage costs $3,800. But the IRS allows you to take what they think the mortgage rate is in your specific county. So to look that up, we're just going to do the same thing. IRS, let's see if they have it in here. Housing utilities expenses. California local standards. There we go. And I think it's also broken up by county, so we might have to find our county here. Yep. So we're going to go to, let's see, housing expense for a family of 3. So it's his third column. We're going to go down to San Diego County. And it's 3668. So the IRS believes that if you live in San Diego County, your allowable expense, your monthly expense that you're allowed to take is up to 3668. And so if I looked at my example here, mine's slightly over, but they're only going to take up to the allowable expense for this. There are some exceptions, but again, that's more above level of this. This is just how to broadly get your example, or how to broadly figure out what you kind of qualify for. This video would be a lot longer if I'm going into really details, but if you're working with a tax resolution professional, they'd be able to kind of mix match these numbers in order to fit the situation, and also to maximize the amount of expenses you're allowed to take. So again, this is very broad, just for you to get like a kind of a ballpark on what you kind of qualify for here. So again, 3668 was less than our monthly cost, so we'll put the lower of the amount. Ownership costs. So this couple actually owns their vehicle. So they already own their vehicle, they don't get ownership costs. But if let's just say that they were leasing their car, or they were financing their car, they'd be able to put that amount here. And to see what you are allowed to get for vehicle costs, we can actually just look it up. IRS vehicle allowable expenses. You get ownership costs, operating costs, and if you use public transportation, you get a public transportation cost. For this example, we both own our cars, so again, if a taxpayer has no lease or car loan payment, the amount allowed for ownership would be 0. So for our example, we're going to be 0. But again, if you were leasing or financing your car, you'd be able to take the ownership cost. And they have it down, if you scroll down, if you did public transportation, you're allowed up to $244. If you're financing or leasing your car for 2 cars, you can have up to $1,324. So an example of your tax resolution professional might do is if you didn't have a car for each one of your family members, for your for the couple example, you might say, hey, go lease a car because you are allowed this expense. And that's one thing you might be able to do. So again, this example, you can have up to $1,324. Again, this couple both own their car, so they don't get anything. But there is operating costs. And so with operating costs for San Diego, so we're going to find the West region, San Diego, for 2 cars, is $670. So we'll go back to our example. 670. And this was 0. Okay, so this is a very simplified version of what we would do. So usually we might have like healthcare expenses, life insurance, healthcare also put in these expenses. But since this couple is in the military, all that is already covered under their situation. So we're not going to add those ones in here. Last thing we want to add is your taxes. So obviously, if you're a W-2 employee, your taxes are withheld through each monthly paycheck, and so you would actually put that amount here. And so for this couple making $23,000 a month, we're just going to do a quarter of that for this example. Again, this would be on your W-2 or on your pay stub. but we're just going to do simple sake here. So 896 times 0.25. So we're going to say their taxes are 5974. All right, so I'm going to work into our formula here, and again, it's reasonable collection potential. First thing we want to do is calculate our assets. So as of right now, they have 2 cars and their house. The IRS isn't going to take their 2 cars because they need that for work, so we can just scrap that out. Our house. The IRS might require you to take a HELOC or take the equity out of the house in order to pay back the back taxes. So, for simplicity's sake, we're just going to say that this house has about $150K of equity. And I want you to see something. One of the first questions the IRS asks if you have a tax debt is, can you full pay it? We didn't go into this couple's bank accounts and their retirement accounts. We're just going to say that they had no money. They were living paycheck to paycheck. They don't have any savings. They don't have anything in their checking that goes out basically with their monthly expenses. So just based off this, they have 100K of tax debt and 150K of equity. The IRS is immediately going to ask them to take out a HELOC to pay off the tax debt. Again, there are ways around this. You can probably get into an installment agreement to prevent this from happening. But the longer you wait, the less options you do have. So this is why it's important to get started with your tax problem, because you have more options the sooner you start. Because if this were to get to a revenue officer, they might just immediately ask you to take out the equity and pay off the debt, and they might not budge, and then we get into a whole more situations and less options for you. But let's just say that this couple didn't own their house, and instead they rented for $3,800. Okay, so now this situation is a little bit different. So they're living basically paycheck to paycheck. No savings, we're just going to say their checking is automatically spent up. Now this kind of changes the situation. So now we don't have any assets that the IRS can really liquidate. So now we're just going to go based off your monthly income and expenses. So here we go. So our monthly income was $23,896. And then we're just going to subtract all the allowable expenses the IRS allows us to take. So take away the $1,753, take away the $366. Actually, no, this is our rent tax mortgage, so we're going to change that to $3,800. Minus our operating costs for our vehicles, and minus our taxes. Okay, so I did the math, and this turned out to be 11,699. Okay, so as you see, 11,699. 11,699 is a lot of leftover income that the IRS will consider. That's how much they can afford for an installment agreement. Again, this is kind of like a power couple because they're both lieutenants in the Navy and they're both making a lot of money. So what they're going to see is that's a lot of income. You guys can afford to pay us on a monthly basis. You're going to qualify for an installment agreement. You're not going to qualify for an offer in compromise because that number is positive. You're not going to qualify for a currently not collectible because that number is positive. So let's just say that only the wife made the money while the dad stayed home with the kid. So now your monthly income is $11,948. Okay, I just did the math, and you have a negative $249. So this will be a good a good example of you will qualify for a currently not collectible status, or you will qualify for, or possibly for, an offer in compromise. So this is a perfect example of what you need to do in order to see if you qualified, by yourself. Again, these numbers this is a very simplified situation. We don't have healthcare costs, insurance costs, so we don't have other reasonable costs that the IRS will allow you to take. But this is just a good way to see if you might qualify for a program. An important step in order to qualify for any program, except currently not collectible, is this 2 years of unfiled returns we have for 2021 and 2020. So generally, the IRS, in order to consider you compliant, is you need to file the last 6 years of your back tax returns. So they won't allow you to get into any kind of a program besides currently not collectible if you have these back taxes owed, or if you have these back tax returns you still need to file. So again, work with a tax professional and get those back taxes filed, and so I can qualify for other situations. But let's just say, well, this is obviously telling me that I'm losing money every month and I won't be able to sustain myself for long. Then the IRS will allow you to go into that currently not collectible status, and they won't require you to file your back taxes, but it's good to get ahead of it, because eventually you're going to need to. I hope you guys enjoyed this video. If you find this helpful, go ahead and like it. It allows me to know that you guys like this material, and I can create more versions of this, or more situations. And if you want more strategies on how to maximize your expenses in order to qualify for some of these programs, go ahead and subscribe to the channel. I'll create more videos. I'm trying to do it multiple times a week now on this kind of situation. So again, thanks, and I'll see you next time.